Welcome to another Plato reporting season video where we bring the latest insights into the February Australian reporting season. My name is Callum Evans with Pinnacle, and today I'm delighted to be joined by Plato's Senior Portfolio Manager, Dr. Peter Gardner. Peter, let's jump straight into this one. CBA reported this morning, massive result. Take us through your initial insights.
Yeah, so overall, as normal with CBA, it's a good result. Their profits were up 3% from the last half, albeit down 3% from the prior year. Now that reduction was due to increased deposit competition, which reduced the amount of net interest margin that they were able to deliver. So they are competing a bit more strongly on deposits, albeit it looks like home loan deposit competition has reduced in the latest period. So overall, CBA was able to declare an interim dividend of 215 cents, which was up 5 cents on last year, or 2.4%, which equates to a 5.6% annual gross yield for this the last annual year. They have performed very strong recently, which is one of the reasons why the yield has reduced. The payout ratio was 72%, and their bad debts were just 9 basis points, which is very low. Now, they did mention that home loan arrears were picking up, but they still are at fairly low levels, below kind of pre-COVID levels. And what was also interesting was that CBA reduced the share of the home lending, but increased their share of business deposits. And so they are trying to increase their share in the business lending market. So one really interesting slide that CBA put out, which they put out the last few results as well, is the share of spending and savings that are being felt by different generations. And so you can see on this slide that while salary and wages is going up pretty fairly across the different income brackets, it's obviously a bit lower for 65 plus, but that's not surprising given most of them are retired. When you look at what's happening to spending and also savings, you see that the older age brackets are doing a lot better than the younger age brackets. So the spending on discretionary items has reduced amongst the 20 to 24-year-old and 25 to 34-year-olds, and their savings have gone backwards over the last 12 months, whereas spending for 65 plus has increased by 3.7% in the discretionary category, and their savings has gone up by 65%. So we're definitely seeing the interest rates take the tolls on different areas of the market.
Thanks, Peter. Now, maybe shifting gears to a company that often gets a lot of attention this time of the year, JB Hi-Fi. Market looks like it's responded quite positively to the result. Any comments here?
Yeah, so it was a very strong result from JB Hi-Fi. While profits were down 20% on last year, they were 6% above market expectations. So the market obviously had been expecting a big drop in profits given the reduced level of COVID spending. The final dividend was also 20% lower, but equates to a 6.9% annual gross yield. So it's still a strong yielder from JB Hi-Fi. But what was interesting was that their sales in the JB Hi-Fi and also Good Guys were actually holding up very strongly. JB New Zealand as well, even up 8.2% so far this this half of the financial year. And they made some comments in the kind of statement on the earnings call they did where they're a bit more positive on consumer sentiment going forward, given the tax cuts and no more interest rate rises. So consumer spending still holding up pretty well, and JB Hi-Fi are taking advantage.
Now, look, I think it is a time of the year where it really highlights the importance of active management. You know, companies outperforming, companies underperforming. You know, I know it's not a time of the year where all things are rosy. Are there any companies that have underperformed, and maybe companies that Plato were cautious leading into the result on?
Yeah, so there were a few companies that have already disappointed. One in the consumer discretionary space was Breville, and so you can see that it's not every company is not doing well in that kind of consumer discretionary. We also saw poor results from Channel 7 and also Seek.com. But overall, the results have been pretty decent.
Yep. Now, maybe on the flip side, is there any companies that have surprised on the upside and delivered strong results for their shareholders?
Yeah, so 3 companies that we liked that were able to increase their dividends and had good results were Challenger, Horizon, and also Car Sales. And so that was positive that companies are increasing their dividends.
Well, Peter, thank you for your time as always. Thank you to everyone who's watching this today. Now, if you want any more information on Plato or the Plato Australian Shares Income Fund, which since inception has been able to deliver 9.7% income per annum, you can visit the Plato website. Thanks for joining us.